After a weak performance in the first quarter of 2025, Endeavour Silver has seemingly redeemed themselves a bit in Q2. The first quarter saw costs blow out as the company seemingly placed all efforts on getting the Terronera project across the finish line. And while there was still some lingering effects from that ramp up in Q2, things at least appear to be on the right track. However, previous comments about that ramp up aren't exactly going to plan, with the ramp up now exceeding the prior 90-day window it was expected to take to achieve full production. On that note, let's dive in. Endeavour Silver in the second quarter recorded top-line revenue of $85 million, which was a 46% improvement on a year-over-year basis from $58 million in the second quarter of last year, while also marking a substantial improvement from the $64 million in top-line revenue recorded in the first quarter. The figure follows the sale of 1.5 million silver ounces at an average realized price of $32.95 an ounce, alongside the sale of 7,700 ounces of gold at an average realized price of $33.20 an ounce. Silver sales were up 20% year over year from 1.2 million ounces, while gold sales declined 22% from 9,900 ounces. The difference here, however, was more than made up on average realized prices, with silver prices increasing 14% and gold prices improving 40%. A further 3.3 million in top-line revenue was contributed from the sale of 86,000 ounces of silver equivalent from Terronera, which was classified as pre-production revenue in Q2. But that 46% bump in revenue didn't mean a whole lot to the company, considering the cost of sales rose to 81 million versus 48 million in the year-ago period. Mine operating earnings overall were just $7.7 million, down from $10.2 million in the year-ago period. The decline in performance here was blamed on Terronera, which had a mine operating loss of $5.9 million, while the rise in the cost of sales were blamed on Kolpa, to the tune of $21.5 million, alongside Terronera, which was blamed for $9.2 million in increases. This, of course, did not translate well to the bottom line, with Endeavour posting a net loss of $20.5 million or 7 cents per share for Q2, versus a loss of $14 million or 6 cents per share in the year-ago period, a 46% decline year over year. The figure, however, was an improvement from the net loss of $33 million in Q1. On an adjusted basis, net earnings declined from $1 million or 0 cents per share in Q2 of 2024 to a loss of $9.2 million or 3 cents per share in Q2 of 2025. Adjusted losses also slipped on a quarter-over-quarter basis, with Q1 seeing an adjusted net loss of just $20,000. But while earnings were down, EBITDA was up, hitting $1.4 million, and improving from negative $2.3 million in the year-ago period. EBITDA was also up quarter-over-quarter, from negative $18.1 million. On an adjusted basis, EBITDA was down 10% year-over-year, dropping from $11.9 million to $10.8 million, while also being down from $15.1 million in the first quarter. In terms of cash flow, mine operating cash flow before taxes improved from $18.9 million to $22.9 million, a 21% improvement, while being largely unchanged from Q1, which recorded $22.1 million. Mine operating cash flow before working capital changes, meanwhile, improved 78% year over year, going from $8.1 million to $14.4 million, which was also unchanged from Q1, which recorded $8.3 million in mine operating cash flow. And finally, the balance sheet, which truthfully needs some work. Working capital declined from $65 million to negative $15 million on a year-over-year basis, with Endeavour ending Q2 with $53 million in cash, down from $65 million at the start of the quarter. The real improvement, at least on the surface, in the second quarter was on the production side of things, even if the financials had some room for improvement. Endeavour in the second quarter produced 1.5 million ounces of silver and 7,800 ounces of gold, alongside 3,500 tons of lead and 2,300 tons of zinc, which all collectively equates to 2.5 million ounces of silver equivalent. Comparatively, Q2 of 2024 saw the production of 1.3 million ounces of silver and 10,500 ounces of gold, which translated to 2.2 million ounces of silver equivalent. Q1 comparatively saw 1.9 million ounces of silver equivalent production. But dig a bit deeper and things weren't quite as rosy as they seem. While production was up year over year, this was attributed to the addition of the Kolpa mine, which Endeavour acquired earlier in the quarter. Excluding Kolpa, production was actually down both year over year and quarter over quarter. Guanacevi saw total production of 1.3 million ounces of silver equivalent in Q2, down from 1.3 million equivalent ounces in Q1 and from 1.5 million equivalent ounces in Q2 of 2024. Bolañitos was down as well, with Q2 production of 4,400,000 ounces versus 538,000 ounces in Q1 and 621,000 ounces in the year-ago period. Kolpa, meanwhile, contributed 805,000 equivalent ounces in Q2, and Terronera produced 27,600 ounces of silver and 725 ounces of gold amid pre-production in Q2 of 2025. As for costing, cash cost came in at $15.35 per silver ounce in Q2, up 14% from $13.43 in the year-ago period, but down from $15.89 in Q1, while all-in sustaining costs totaled out at $25.16 an ounce, increasing 9% from $23.13 in the second quarter of last year, while also being up from $24.48 in the first quarter. Cash costs are said to have come in higher as a result of lower production at both Bolañito and Guanaceví, offset by lower cash costs at Kolpa. However, AISC is said to have been higher as a result of higher AISC at Kolpa. So it was really 6 of one and half a dozen of the other. And then there was Terronera, which is still in the process of being commissioned, exceeding the 90-day time frame that Endeavour gave on their Q1 conference call from the start of wet commissioning. As per an August 5th update, milling rates currently stand between 1,900 and 2,000 tons per day, after July averaged 1,841 tons per day. With design capacity at 2,000 tons per day, it means Endeavour is getting close to their final target, at least in terms of throughput rates. But recoveries are coming up short. From July 16th through to August 5th, recoveries are said to have averaged 71% for silver and 67% for gold, which is quite short of the flow sheet specs. Back at the time of the construction decision being made in early 2023, silver recoveries were estimated at 89.5% and gold recoveries at 78.7%, which would lead to annual production of 4 million ounces of silver and 38,000 ounces of gold, which at the time equated to 7 million ounces of silver equivalent a year over a 10-year mine life. In other words, there's some work to do. Optimization efforts are continuing on this front, with improvements expected once some higher grade material hits the plant in the near term, while adjustments are being made to both the grinding and flotation circuits. Once those recoveries improve, Endeavour will then focus on consistently hitting that 2,000 ton per day target. All right, so let's wrap it up. Admittedly, Endeavour could have done better in the second quarter, but they're better than they have been. Once Terronera hits commercial production, we get the sense that cost containment will become the next focus here. The first half of 2025 saw some skewing to the figures as a result of spending at Terronera and Kolpa just being added to the mix, with plans for some processing expansion. So Endeavour right now is very much stuck in a growth phase, and those things don't always go to plan as investors expect them to. All right, everybody, thanks for watching. If there's stories you want us to cover, as always, let us know in the comments section. We have lots of earnings videos on our channel, so if you want more of those, check them out. And if you want more mining content, maybe check out our website over at thedeepdive.ca. All right, everybody, thanks for watching.